Hello everyone, welcome to the Technical Investor channel. So in today's video, we're going to look at one interesting company from the small cap space, which looks really good and which is setting up really well technically as well. Now this company is from the refrigeration space and it serves the B2B customers or big companies, and they help them, maintain cold temperatures in rooms. They help them build cold rooms so that your products do not get spoiled. And this company looks very interesting because in the last 3 years in fact, they have doubled their sales from 100 to 190 crores, almost doubled. And that's what we're going to look at today. So I'm sure you're going to like this. I'm sure you're going to like the stock as well because it's just 180 crores market cap and it can grow many folds in the coming years. So before we jump into this video itself, if you haven't liked this video and if you haven't subscribed to my channel, go ahead and subscribe, because there are a lot of interesting things that I post on YouTube. And if you haven't followed me on Twitter, do follow me on Twitter as well. So without wasting more time, let's jump into today's video, and I'm going to look at a few things before we get into this stock video itself. First is I'm going to look at Nifty and I'm going to tell you what is the current trend, because there's a lot of negative news, especially in the weekend with Dow closing 2.5% down. It does make it very interesting. Should we be picking stocks currently? So I'm going to give a quick Nifty view, and then we look at the fundamentals and then technicals of this company, and then I'll leave it to you to decide if you want to invest in the stock. So first, Nifty itself. So Nifty has been in a downtrend, since the top it made in October. So it's been almost 6 months since we've been going sideways, and definitely it's not good because it doesn't provide, a bullish momentum that's required for many stocks. So overall, if you look, this is the channel, that's a downtrend that you're looking at, and it is making continuously lower high and lower lows. And that's not a really good thing for the markets itself, because stocks need some continued bullish momentum, and if the market supports, then the stock can continue to do well. Okay, so overall for me, yes, definitely the Nifty is looking weak, and unless we break this levels here and head higher, I don't see a lot of bullish moves in many stocks. But there are always stocks which will do well, and there's always this rotation which happens in terms of which stocks perform in which cycles. Right now, during the 2020 crash, we had a lot of pharma stocks performing, and then we had a lot of other sectors performing. But of late, we have had sectors like hotel performing. I posted a lot of charts on Twitter. I've also the paper stocks are performing, and there are a few other stocks, and today's stock also might outperform the markets going forward. Now, in case you want to understand, whether your portfolios are performing in the markets or not, I did make a video last week on relative strength. So you might want to check the relative strength video and, gain some insights on how relative strength could definitely help you identify stocks which are doing well, and help you identify whether your mutual funds are doing well, outperforming your markets, or even your stocks, whether they're outperforming the markets or not. Okay, so that's a quick view on Nifty, and I'm always going to be bullish on a few stocks, whether the market's down or up. There are always some stocks which are going to go up, and I'm going to focus on them, and I'm going to be investing in them always, and I'm going to make that additional, few percentage returns which mutual funds will not give you, and I'm going to continue to educate you, and continue to do these videos going forward. So let's look into this company itself. The company we're going to discuss is ICEMAKE Refrigeration, and as always, I'm going to start looking at the technicals and then we look at fundamentals. So I use TradingView. So in case you don't know how to use TradingView, there is a video which I did on TradingView basics, so you have to go and check that out as well. So as always, first thing is you have to start with the monthly time frame. So when you look at the monthly time frame, you need to find what is the trend of the stock. Right now, in this case, the monthly time frame, if you see, the stock was listed in 2017 and it has not gone above the listing highs till now. It tried to go in December 2020, but they couldn't cross, and again it tried in last month, it couldn't cross, and probably this month it's attempting to make a new high. And I feel that if it makes a new high, then we can see some really good returns in the stock. Okay, so also if you just take a view on the overall resistance, so it's a 4.5 year resistance. Almost since 2017, 2018, right? So almost a 4.5 years resistance. And if you're going to break that level of 120, then we can see some really good momentum in the stock, and the stock can head higher. The other thing to notice here in this stock is the IPO. Since IPO, the volumes have not been that high, but we had some really good volumes coming in after that crash in March 2020. Then again, we saw some volume pick up here, but the last month volumes have been excellent. Right, and that's what makes this stock interesting, right? And also, if you see, we've had a very strong resistance, and if you switch to the weekly charts, which is the next thing that you have to do, you will get a much better view on what's happening in the recent weeks. Now in the recent weeks, the stock has been going sideways. Since the last 6 weeks, stock has been going sideways, and we had a weekly CCI crossing 100 on the weekly charts, and that's when the stock came into my scanner. In case you do not know how to use CCI, I've also done a video on that. Do check that video out, it might help you. And also relative strength, the video which I posted last week, the stock has again done well again here, right? And the strength has been excellent, and this week the strength has made a new high before even the stock has made a new high, right? So if you see here, the relative strength is 0.75, whereas here if you see we made a 0.76, and that's also what makes this stock really interesting, right? CCI above 100, relative strength above 100, stock is about to cross all-time highs, which is why it makes this a fantastic pick for this week's video. Okay, now finally we're going to move to the daily charts to find our entry points, stop loss, and possibly what could be the targets from here, right? So here if you see on the daily charts, again we've seen a nice consolidation, a rectangle consolidation. So if you take this point and and if you draw this, it's a nice rectangle consolidation that's going on. And rectangle consolidation is one of my favorite setups after the inverted head and shoulders, because it is nothing but the stock is just going sideways. There is hardly any selling and there's hardly any buying, but the stock is not going down, so it shows that there's not much selling happening in the stock. Okay, so but what I'm going to look at is I'm going to look at one more point here, which is the highest weekly close, highest daily close, and highest weekly close. Now if you see, the stock has been facing resistance around that point. It tried to open gap up on 25th, but then it came and closed below. Again it tried opening higher, it came again below, opened higher, came again below. But in the last couple of days, the stock has managed to close high, right? So overall for me, this is an excellent setup, and it's an excellent base, and I feel that this stock is going to blast in the coming weeks and months. And if it does blast, then you're going to see some really good returns. So you can buy at current market price if you want to buy the stock with a stop loss, around 94 levels or even 90 levels. So 90, buy at 113, 114 levels, keep a stop loss of 90 here, and we're going to see how much the stock is going to head higher to. Now I always say ride the trend. So if you're new, then riding trend might be a little difficult. You might give back some profits. So what I suggest you is, book profits whenever you want to, but try to ride the trend and try to make big profits in this stock, right? So the targets we're looking at in the stock is at least 200 from here. Now the reason why I'm saying 200 is it's a massive base that the stock has formed. So if you see from this highs, so 120 to almost a base of 30, right? So I'm looking at least 100 points move from here, which is around 200 levels. And from there, if the stock heads higher, you can still continue to ride the trend. And if you also want to invest, you can continue to hold the stock with the stop at 90, and just leave it. Maybe it goes to 100,000 levels in the next many years. 1,000 market cap is 10x from here, so we never know, right? But all I can see is the stock is fundamentally and technically good, and that's why I'm recommending the stock. So do let me know what are your thoughts on my technical analysis, because technical analysis is very subjective and you might have your own views. So do let me know your thoughts on the comments in the comment section before we jump into the fundamental analysis. Now fundamental analysis is also very important because it gives you a context on what the company is doing, what is the strategy of the company, what is it doing when you look at combine the price and look at it, it gives you total holistic perspective as to what this company can potentially do in terms of the price going forward. Okay, so I'm going to switch into the fundamentals. I'm going to show you fundamentally what the company has been doing. So as usual, I'm going to look at screen out in. I'm going to give you a few points here. So the company is involved in the business of manufacturing cold rooms, freezer, refrigerant systems. As I mentioned, you can also take a look at the product portfolio itself here. They give a short overview on what kind of products they have. They have cold room chilling plants, dairy machinery, containers, and in this space, India still has a very long way to go, right? We all know there's so much of wastage which happens along the supply chain while transporting fruits, while transporting vegetables, and that supply chain wastage is something that we want to control. Apart from that, companies also want to improve, the storage facilities that they have in the companies also. And India is a consumption story, so there's a lot of potential in this space because it's a space which is not really explored, and we don't have many organized players in the space. We have Snowman, probably really can't name any more names, but Snowman followed by ICEMAKE. Okay, so looking at the numbers again, the company has been doing decent in terms of ROC and ROE. It's a manufacturing company, so I don't expect very high ROCs here, ROE here. But what I'm looking at is the sales growth. The sales growth is excellent at 46%. We'll look at the numbers shortly, but also what I want you to focus on is in the PE, right? So the PE, if you look at here, the PE has been going high. which is not a good thing. I'd have loved the P to be little low or historically low levels, but what I'm looking at is the sales growth, which we look at. So EPS has not been growing also well, but it's a small company, and the strategy also says that they are focusing on improving the sales, they're focusing on getting customers, and they are little, lenient on the profit margins, and they're trying to sacrifice some of the profit margins to gain customer base. Now that's a strategy might work for small cap companies because they can't focus on margins when you're growing. Probably margins come at a later point, so that's totally fine for me. And I'm going to look at the quarterly sales. In the last 2 quarters, they've done decent sales, around 46 to 47 crores, 52 crores. Right now, that's if you look at historical numbers, they have been steady around that 40 to 50 crore mark of late. And also look at the annual sales. They have gone from 100 crores in 2018 to this year they're going to post a 170 crore profit, right? Now that's a very, very, very good jump in the sales. Now, which means the sales strategy is working. All they have to do is now, once they start growing to a big base, then they can start focusing on the profit margins and start bringing in more profits for the company, right? So they've been doing around 8 crore to 7 crore PAT, and off rate has been going down to 4-5 crores. That's primarily because of the management strategy to focus on sales. Okay. And here, if you look at the reserves, they have decent reserves. So if they want to do some capex, they can do, and they can expand. And even in terms of the shareholding, majority of the shares is being held by the company itself. And that's some of the things that I wanted to highlight in today's video. But before that, I also want to make a few more points on the company's clients and what kind of industries they are catering to. So the company is catering to pharmaceuticals, dairy, ice cream, healthcare, food products, and the e-commerce industry. So e-commerce is also a space that they are focusing on recently. And they have some of the biggest clients like Amul, Coca-Cola, Hindustan Unilever, Subway, Vadilal Industries, Indian Railways, which has a huge potential, Torrent Pharmaceuticals, Zydus, right? So these are some of the top clients, and the top clients actually contribute to only 25 to 30% of the revenues, which shows that they have a diverse base and they're not depending on the top clients itself to make revenues for the company, right? And also the company is tying up with foreign countries, for the exports, and I think this also might start contributing to the overall top and bottom line. And the only risk that I want to highlight here is, I'll also post this here, but you can also read this. The only risk that I see here in this company is, in terms of the raw material price increase. Now, we all know that inflation has been pretty high, and that is one of the things that might affect the bottom line going forward. But I think if the company's focus is pretty clear, and if they're profitable and they're able to stay profitable in this high inflationary times, I think they might do well going forward, right? And their focus is also on exports. So don't forget, even though the margins are right now around 6 to 7% the gross profit margins, they might do well going forward, in the coming years. So some of the data points I've taken is from this report from K Ratings. I also share this link on the video description so they can check them out. But that's what I had for today to discuss about ICEMAKE refrigerators itself. Also, Snowman also looks decent, and I think Snowman also might be a good bet at this point. The only thing is, this company has a very strong focus on sales growth, whereas Snowman is still struggling, and that's why I do not cover Snowman, rather I cover ICEMAKE, and I feel this company can do well going forward. So do let me know your thoughts on this video, on both my fundamental and my technical analysis, and you might also have some views, so do let me know views in the comment section as well. But before I leave, keep your stop loss strict, 90 stop loss, buy at 113, and let me know if you're buying as well. And don't forget, in case it goes below 90, if it closes any day below 90, please exit the stock and don't hold on to the stock. We can look at it again at some point later. Okay, so that's it for today. I'll leave you here. Take care, stay safe, and trade safe. Until I see you in another video. Bye bye.